The strategy employs the standard Bollinger Band setting along with the CCI indicator set to a period of 40 and levels of plus minus 300 correspondingly. In simpler terms, if you're trading on a 1-minute time frame, your entry should be for 2 minutes. For a 5-minute time frame, you'd enter for 10 minutes. In essence, the conclusions drawn are straightforward and logical. Hey guys, my name is Mary and I'm your personal trader. This YouTube channel aims to unite individuals interested in trading. I introduced you to the world of trading, so make sure to subscribe to the channel to stay up to date. In my Telegram channel, I provide precise signals for my subscribers, so you can also subscribe there. The link is in the description. Let's work together. Today, I will demonstrate and explain both the practical and theoretical aspects of the strategy called le confort, which translates from French to mean comfort or convenience. I will tell you about the conditions for applying the trading system le confort with the CCI and BB indicators. I will show the settings and descriptions, the peculiarities of the tools and markets for the currency trading strategy. I'll start by showing you the practical part, and then we will dive into theory, so you won't be bored. We're going to put the le confort strategy to the test in live market conditions. Right here, we can promptly initiate a trade on the Australian dollar and Czech franc currency pair. I'll be entering for a duration of 6 minutes, taking a short position with a stake of $1,000. We're all set. Let's take a look at the current chart developments. The strategy employs the standard Bollinger Band setting along with the CCI indicator set to a period of 40 and levels of plus minus 300 correspondingly. I've opted for a 3-minute time frame and the trade's duration spans across 2 candles. The strategy demonstrates its optimal performance with trades scanning 2 candles. In simpler terms, if you're trading on a 1-minute time frame, your entry should be for 2 minutes. For a 5-minute time frame, you'd enter for 10 minutes. Given my choice of a 3-minute time frame, I've entered for 6 minutes. I believe this concept is now clearer. Each strategy comes with its own considerations regarding trade duration. In essence, the conclusions drawn are straightforward and logical. Regardless of whether the market is experiencing a trend, correction, or sideways movement, it invariably reaches a natural conclusion. Typically, the price alters its direction or conversely breaks free from the sideways phase. These indicators, the Commodity Channel Index, or CCI, and Bollinger Bands, signal a specific scenario where market participants pivot towards corrections due to limitless prospects of the ongoing trend. We execute trades based on these indicators. For instance, the buying process starts when the CCI indicator drops below the minus 300 threshold, and if the price approaches the lower Bollinger Band, this becomes another buying opportunity. For selling, it's advisable to wait the reverse scenario, the price nearing the upper Bollinger Band, while the CCI indicator registers values above plus 300. In essence, the value of 300 isn't set in stone. It might exhibit values like minus or plus 250 or even 200. A value of 300 acts as a robust signal that the current market direction is fatigued. When the value hovers around plus or minus 300, the likelihood heightens for the next 2 candles to move in the opposite direction, leading to a profitable trade within that span. Hence, opt for an expiration time twice as long as the time frame used for chart analysis. Time frames of 3 to 5 minutes are most effective because the market needs adequate time to unfold. For instance, a 2-minute trade might not pan out due to any unforeseen movement resulting in a loss, much like my experience where the chart unexpectedly surged before collapsing as I had anticipated. All in all, the trade is functioning as intended. I'm anticipating a decrease and possibly a correction afterward, inevitable elements that must be factored into a time frame and entry point choices. It's crucial to grasp that no strategy guarantees 100% profitable trades. In my case, I achieve profits in around 70–80% of instances. Vigilance towards risks, adherence to money management and risk management principles remains paramount. Even if you stumble upon the perfect strategy, losses inevitably occur, and it's imperative to Curtail these losses to prevent total depletion of your funds. Just 3 minutes remaining until the trade concludes, so let's hold tight and await the outcome. The trade is reaching its closure with approximately 20 seconds remaining. As I previously noted, the price descended and now culminated in a correction. Profit is now assured, and it appears the price will continue its downward trajectory. As you can see, the strategy is proving highly effective. I will explain the principles of applying the comfort trading system using the CCI and BB indicators. I will showcase the settings and descriptions, highlighting the features of the tools in the context of trading strategy on the Forex market. The core concept of this trading approach revolves around capitalizing on pullbacks following significant price movements or impulses. To ascertain the conclusion of such movements, two fundamental tools are employed: CCI, meaning Commodity Channel Index. This indicator gauges the extent to which the current price deviates from its statistical mean over a specific time frame. A higher deviation indicates a greater departure from the average value, implying an increased likelihood of a pullback. For CCI, it's essential to include levels of plus and minus 300 with a period setting of 40 for effective utilization of the M5 timeframe. Bollinger Bands. These are envelopes delineated at standard deviation levels above and below a simple moving averages of the price. The bands adjust to volatility fluctuations in the underlying price, effectively forming a price channel. The default parameter values are a period of 20 and 2 standard deviations, though customization is possible. Bollinger Bands serve to identify whether prices are relatively high or low, and they are used in conjunction with a moving average. It's important to know that Bollinger Bands are most effective when corroborated with other indicators to validate signals. The trading system is constructed around the concept of a price channel, wherein the width of the channel is linked to volatility. The default settings of Bollinger Bands maintain price within the channel approximately 95% of the time. Bearish signals emerge when the CCI line crosses the plus 300 threshold from bottom to top. Simultaneously, the closing price of the corresponding candle should be above the upper boundary of the Bollinger Bands. Conversely, bullish signals follow a mirrored pattern. The CCI line should drop below minus 300, and the candle in which this occurs must close below the lowest boundary of the Bollinger Bands. This strategy doesn't necessitate strong reversal movements for entry points. A minor pullback subsequent to the entry signal is typically adequate. Even when operating on the M5 timeframe, the trading intensity remains moderate, a primary drawback of the strategy. However, this is offset by the strategy's high win rate exceeding 70%. Addressing the trading frequency issue can be achieved by simultaneously trading across 5 to 7 currency pairs. The trade duration is calculated based on 3 candles. For a 5-minute chart, the signal is executed within a 15-minute time frame. Originally designed for binary options where spreads are absent and profit is independent of price distance covered, the strategy necessitates modifications when applied to Forex trading. Given the presence of the spreads, the strategy requires adjustments. First one is to increase the working time frame to 1 hour. Set the CCI period to 14. Set CCI levels within the range of 140 to 170. In this case, potential gains range from 120 to 260 pips. A notable advantage of the hourly time frame is the option to place a take profit order positioned at the opposing boundary of the Bollinger Bands. To enhance reliability, when the middle BB line is reached, half of the trade volume is locked in, while the remaining part is set to break even by the adjustment of the stop loss. In summary, the comfort trading system leverages the CCI and BB indicators to identify favorable trading conditions, adapting to the Forex market's dynamics and its inherent challenges. I genuinely trust that you found this segment pleasurable, and I would greatly appreciate if you could express your support by giving it a thumbs up or leave in the comments under this video. If you happen to have any questions, don't hesitate to leave them in the comments as well, and I'll make sure to respond to them, perhaps even produce a special video addressing them. I'm eagerly anticipating your subscription to my YouTube channel. For those who are intrigued by trading collaboratively, ensure you subscribe to my Telegram channel where I provide complimentary trade entry signals. Simply follow my guidance and let's achieve profits together. I'm excited about the prospect of reconnecting with you soon, so see you soon.